Good morning, everybody. Hope everyone's doing wonderfully well. It is 9 a.m. on a Wednesday. That means I'm joining you here with the game plan live. I've already got my charts set up here, guys, because I don't want to waste any time. We're going to get right into the nitty gritty. We're going to start with crypto. We're going to go to stocks. I have some trades on stocks that I think are absolutely genius trades here. And I think you'll understand when I get to it what I'm talking about. Then we're going to go to macro data. We're going to talk about gold. We're going to talk about silver. Where are the trades? What are the earnings coming out here? Where do we need to be positioned? All right. So let's start with Bitcoin. Bitcoin again, guys. We're going to briefly go over this. But I just want to point out that you have to understand the implications of this sideways consolidation. So as long as we continue to hold this lower band right here, all right, now I still remember a week ago we popped above it and we closed above it, and everyone was like, oh, here we go. Gareth was wrong. It's going to break out, blah, 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 blah. And then what happens? They get the good old fashioned rug pull. Right. So that's what happens. That's the inevitability. Is you have to understand the confirmation signal about how key it is. You must confirm a breakout to be a breakout, just like you must confirm a breakdown to be a real breakdown. I can't tell you how many institutions sit there waiting for you to jump the gun and go long thinking something's a breakout, only to pull the rug out from under you. All right, the confirmation signal, it is something that every trader must know, every investor must know, or honestly, you're just going to keep on losing money. It's just that simple. All right, so what did we see? We saw Bitcoin reversing here, and we have now retested this low. Now, the impressive, there's positives and negatives here on the chart. The positive is we're still inside of this band, right? We're still inside of this realm. The positive is also the last 2 days we've been piercing this lower band of 30,000, and they've rescued the market. They've rescued. You've had buyers come in and keep price right around that 30,000 daily close, give or take by a little bit. Today we're up just fractionally on the Bitcoin price. All right. So again, those are some positives. The negatives are this. Look at how long we've been going sideways. Yes, this is known in technical analysis as bullish consolidation, but really bullish consolidation should break out by now. All right, you should have had a breakout. Doesn't mean it can't, but probabilities begin to shift, right? We start to say, okay, it hasn't been able to. Think about this. There's the old analogy, and I love this analogy. This is an analogy I use about resistance or support. Think about yourself. You're outside of your house. There's a fire in your house. You have your cat or your dog in there. You need to break it down, right? So you ram against that level. That's resistance. You're ramming your shoulder into it. You hit it once, it probably doesn't break down. You hit it twice, it maybe doesn't break down. By the third or the fourth point, it probably the door gives way. Okay, that's the thought process. So if we look at Bitcoin, you hit it here, you hit it here, 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 here. You even kind of got halfway in and it still didn't give way. And so what happens is, let's say there's that fire and there's that cat or that dog inside that you want to save, and you get to a point where you ram the door 50 times and it still doesn't break. What are you going to do? Well, you're going to figure out another way. You're going to maybe go around to a window. You're going to go around to the back door. You're going to leave this area and move away. And that's the thought process where if you can't break out after a certain amount of time, the path of least resistance is to, in this case, the downside. All right. So again, to summarize, Bitcoin's still within this range. But again, if we confirm below this level, you're now headed to 28,500 or so, this pivot. And if you break through that, let's talk about where we're headed. This is my target. Okay, target is 26,900, basically around 27,000. Amazing trend line. Now, I want to be clear on this. As long as this trend line holds, this one here, this white one, then Bitcoin can be bought on pullbacks. Okay, why? Well, very simply, this is an upsloping trend line connecting all the pivot lows together. That means it is an uptrend. The trend is still up. If you break this line and you start trading down in this range, the trend is not up anymore. It has failed. And now you have to think you're probably headed back. First support would be 25,000. then potentially 20,000. And eventually, if you keep breaking these pivot lows, you're going back to that 15,700 level. All right. So again, that's your summary. Now on the upside, let's just say Bitcoin eventually breaks out, which again, I'm a long-term bull. So eventually I do think Bitcoin breaks out. My upside is very simple to calculate here. You take this pivot from 2019, you stretch it right through here. This is my ultimate kind of, 6 to 12 month upside target. You could see that's a beautiful trend line through these lows right through here, and that's around 45,000. So again, if you're able to break above this level, this 31,000 and confirm, then you're headed to about 45,000. There is resistance around 35 that you'll have to monitor, but I still think, again, the momentum probably carries us up to about 45,000. All right, so that's your summary on Bitcoin. Quickly looking at Ethereum, guys. Ethereum, again, this is the beauty of it. Look at this little channel right in here. If this breaks, we head down to this level around $1,730, $1,740. If this area breaks, we're probably headed to this pivot high right up here at around 2,130. Now, one thing I want to say is, this is the beauty of it, guys. Everyone, when I go on interviews, they always ask me, well, what's your big play here? What's your thought process? What's your max downside? And my max downside still is 12,000 on Bitcoin with worst case scenario of 9,000. Now, 9,000 would be achieved only if you see a stock market collapse, because it would be a liquidity draining panic scenario, right? So people would run away from risk assets and Bitcoin would have probably a downside move sub 10,000. All right. But the bottom line again is that when you're looking at these charts, I'm in here trading long and short multiple times. Like we were short Ethereum already and we banked, and Ethereum went back up and we went short right here again, and now we're in the money. All right. So same thing with Matic. I love this trade setup, right? So Matic, right, when it was down here in Bitcoin dominance, and I want to show you this, and this is really getting into some nitty gritty, but Bitcoin dominance rallied 5%. All right. If you look historically, every time it rallies 5%, there's a pullback. There's a sideways consolidation or pullback. So in my mind, my kind of forward thinking mind for trade signals in verified investing crypto, which is my crypto service at verifiedinvesting.com, I said to myself, if Bitcoin dominance is going to pull back and you have everyone thinking the altcoins are dead and they were trading down here, let's buy some altcoins. And so we bought Polygon, we bought Cardano, banked like 15, 16, 18% on those trades because I was using the Bitcoin dominance chart to signal, okay, Bitcoin dominance, yes, I think it's going to go much higher down the line, but it's likely going to pull back first, which gives you the option to get in the altcoins and make some money on a bounce. And look at that, exactly what I thought was going to happen. And now, by the way, Matic is coming back in here. I have a buy level on Matic in this range right down here again, which again, in verified investing crypto members will get. All right, we got to go on to the S&P 500 here. S&P 500 long-term trend line, we have now moved above it, which is absolutely phenomenal. It's amazing. It blows my mind. Every day I'm seeing data, economic data that shows a slowing economy, but the markets keep chugging higher. I've honestly been very surprised about the strength in the markets. If you look at money supply, if you look at a lot of other factors, there's a lot of factors, including economics, except for jobs. Jobs is the only thing that maybe we saw a crack on last month in the non-farm payrolls, but they've remained strong and the consumer continues to spend pretty well. This is your next target on the S&P right here around 45.88. That's a pivot point right there, and that'll be your second well, there's a couple more pivots. If you get through that, where until we get to the all-time highs, you have this pivot, then you have this pivot right here, and then eventually you have the all-time highs here. Is it possible the S&P goes to the all-time highs? It's possible. I'm still a skeptic until it happens. I'm a technician. So just by default, I look at all the resistance levels that it has to get through first to get there. I look at the RSIs. I look at how extended things are. But again, the way this market has been advancing since this low in March. Now, by the way, what happened in March that kind of shifted things? I'm going to tell you. The banking crisis. We saw Silicon Valley Bank fail. We saw a bunch of these other banks panic. And what's fascinating about this is that basically the Federal Reserve and the government guaranteed deposits. That was the kicker here. So now all of a sudden, even though all of these banks are holding all this dead weight paper, they're underwater hundreds of billions of dollars. There's no risk to the consumer. The consumer can have as much money as they want at a bank, and virtually there's no risk of them losing their deposits. And that marked the change in character. If you look at where this market began, this big uptrend, now you had uptrends prior, but they had big pullbacks, right? This is the uptrend here that hasn't had a big pullback, and it coexists with the Federal Reserve getting involved, basically giving the banks lots of potential liquidity so that they are made full, and there we have it. All right, so again, very interesting to see that. Now, if we go to the QQQ, fascinating chart here. We are right at the upper end. Now, what's interesting about this is that the Nasdaq is coming into a very, number one, it's into a level right here. We know this parallels. Look at the parallels here, guys. All right. In fact, I can even remove this one just so we see the parallels. You have this parallel line, which is parallel to this line, which is parallel to this line. So we know that we're at resistance coming into Netflix earnings today, as well as Tesla earnings. Now, Netflix had an insane move yesterday. I'm going to show you here. So Netflix is trading up pre-market. All right. So Netflix, again, is up pre-market. Your max upside for me on earnings is this gap fill. All right. In technical analysis, to have something that has continued up and to get through the gap fill would be very, very unusual. So your upside max on earnings here is 508. That would be your max upside. In addition, you can see that level actually coexists with levels over here. Your downside, if you do pull back, your downside is probably only to about 443, 445. So again, you're basically equidistant. You could go up about $30 from here, or you could go down about $30 on earnings. And if you look at the options, they're basically pricing that in about a $30 move on this announcement. Now, which way do I think it's going to go? Heck, I'll be, who knows? To be honest, at this stage in this market environment, it's far too tricky to kind of understand the market metrics, and we just continue to kind of move higher. At some point, there will be a big reversal. There's no doubt about it. A couple things to note here. Some of the craziness. All right. So yesterday, Microsoft announced they were going to charge about a $30 fee to anyone using their AI tools in their Microsoft product. The stock gained 120 billion with a B dollars on that news. Just on that news, the stock gained 120 billion. That's a lot of profit to generate for a $30 fee, right? So again, just think about that. Couple other things I want to show you guys here that I have some cool charts on. All right. Let me bring this up here. All right. If we take a look, and everyone is always telling me, and I've heard this a million times over, everyone's telling me that, oh, it's the broadening rally. It's not just the Magnificent Seven that have been carrying this market up. But take a look at this. All right. Here's a chart that shows you, if you look at the S&P, up about 15 to 16% so far this year. If you look at the S&P minus this Magnificent Seven, it's only up about 4%. The Magnificent Seven up 58%. So you can't tell me that this rally is a broad-based rally. No, I'm sorry. The data does not show that. All right. The data does not show. When you have the rest of the S&P up 4% on the year and the Magnificent Seven up 58%, that is not a broad-based rally. And when you combine the two, you're up 15%, right? Maybe 16% now since this graphic was given. All right. The other thing to kind of keep in mind, I mentioned some other technicals, and every time I do these game plans, I always like to look at some of the recent economic news. So again, one of the recent economic news pictures here is tax receipts. And look at what's happening here. All right. Now, this is very counterintuitive because we would assume that the economy is good, right? The economy is doing great. So government should be making lots of tax revenue. But tax revenue has plunged back, getting towards the levels where we were in the pandemic when people were not working. And if you look historically at when revenue for the government declined, it coexisted with recessions. And the reason why this is so important, why declining government tax revenue is important, is because we're not in periods like we were in 2010 or 1980 or 2000 when we had scenarios where the government didn't have as much debt, right? Right now, we are at $32 trillion in debt for this country, and interest rates have just gone up exponentially from basically zero to 5.25%. And so now you have $800 billion a year right now, and that's going to go up every single year, at least right now, $800 billion that are going to be influencing how much money we're paying in interest. 800 billion in interest alone. Yet we see government tax revenue falling off a cliff, okay? So again, these are the types of things that I want to point out. Lastly, I want to show you this. The industrial production numbers just came out yesterday. They were negative. And what we can also see is industrial production over here is starting to go negative. But if we look in the past, here was COVID. Obviously, COVID, we know what happened there. Here was 2009. But again, same thing. You want to be aware that these can be signals of a slowing economy that could be headed towards recession. And the narrative right now, folks, the narrative is that everything is going to be a perfect soft landing. There's no problems. The other thing to point out, too, is retail sales. Retail sales came out yesterday, and they were worse than expected. And interestingly enough, we saw auto sales. Auto sales were a big drag, meaning autos are not selling very well right now. Now, that almost makes sense because if we remember, Ford Motor Company just cut the F-150 Lightning, and that's why the stock tanked here 2 days ago. They cut it by 20%. We know Tesla has been cutting its prices by a significant margin over the last couple months. So what this is telling us is the auto market is starting to slow down, and that also jives with the secondhand. The used auto market is now starting to collapse. So we are starting to see signals, but again, there's a disconnect between what we're seeing here and what we're seeing in the stock market, mainly because, again, in my personal opinion, you still have a lot of money out there. People still got relatively cheap loans on homes, so they're doing all right. They can even tap equity in their homes that have gone up. And so there's still a lot of money sloshing around the system. At some point, especially with retail debt now north of $1 trillion, credit card debt is north of $1 trillion, that is going to catch up. Is it at the end of this year? Is it at the end of next year? Is it early next year? We're going to find out. But again, while the markets are having this jovial period, understand that there are storm clouds out there, and you just have to be aware going forward. All right, so quickly, let's take a look at Tesla going into earnings today. Tesla is up at an upper band here. If it rallies, this is your target here, 315-ish, right up here. Major pivot high right here. Upsloping channel trend line, parallel line. So I would say anything in that realm of around 315, that would be your best case scenario for upside, which again would be about a $20 move from current levels where we currently are. If it has a downside move, your downside's to about 260, 261. That would be the lower end of this channel. So again, upside, downside, there's your levels on Tesla for Tesla earnings after the bell. We already covered the Netflix. You also have Las Vegas Sands, UAL, and a few other companies reporting after the bell today. Now, a trade I want you guys to think about is this. Here's NVIDIA, okay? Now, NVIDIA's had an amazing run. Now, here's AMD, okay? If we look at AMD, okay, if we go back on AMD, and this is a very unique trade. I think you guys are going to find this fascinating. So if you look at AMD and NVIDIA, they always traded together. Always, until 2023, right here, the beginning of the year. At that point, there was a divergence with NVIDIA soaring and AMD lagging significantly. So this is an interesting trade. You want an interesting trade? Short NVIDIA, long AMD. Think about it. Short NVIDIA, long AMD. Worst case, if they trade together, it's a hedged trade and there's no risk. But if I'm correct, I think you see NVIDIA pull back and maybe AMD start to rally. Think about that. So again, it's a very interesting pairs trade here. You know, a lot of times this is used in Forex. In this case, I think it's a very interesting opportunity with a divergence. And again, historically, look, I mean, these things have traded together always, basically. I mean, they're two semiconductors. They're the two best semiconductors. but this divergence gives an opportunity. I think this comes in, this rallies higher potentially, and they could meet in the middle. So interesting little trade there. All right, lastly, we got to go to gold, guys. I know you got the gold bugs out there that want to know. Let's remove that AMD. Gold is doing exactly what I said it would do. I said it would stall at triple top, pull back right to this trend line, the scene of the crime trend line, and then start to advance. I still think this is gonna have pullbacks, but eventually this is gonna go higher and higher and higher. Triple top again. I think by year end we're above this level. All right. If we look at this triple top right here, again, my guess is easily by year end we've broken out to the upside. Now the bigger question is, where will the S&P be at that point? Where will the Bitcoin be? Now lastly, quickly, guys, the dollar. Let's take a look at the dollar here. The dollar has broken down. Look at this amazing trend line here. We've had a breakdown on the dollar. The dollar's catching a little bit of a bid, but look at that. It's forming a bear flag, or at least the preliminary bearish pattern. So my guess is the dollar goes sideways to up for a few more days, and then I think you have more downside on the dollar. I think next downside on the dollar takes us down probably in, it's a little tricky to figure out, but somewhere in this vicinity. I would guess your downside major support kind of comes in somewhere in this zone here, 98 to 97 on the US dollar. But again, you could easily rally back. I mean, if I had to pick, I would say rally back to scene of the crime of these two lows, pivot low, pivot low. And so you're looking at a move back to like 185, maybe 101, somewhere in that vicinity before further downside. But I do think the dollar will head lower per the chart. The only difference would be is if we saw some sort of geopolitical issue where all of a sudden everyone runs into the dollar, then obviously the dollar would get some action there. All right, guys. On that note, I got to get going. I got to get to my trading room, but another action-packed game plan here. You guys have a wonderful, wonderful rest of your day. And again, thank you for tuning in. I really do appreciate it, and I'll talk to you all soon.